Very good afternoon, everyone. Welcome to yet another uLaw webinar. In today's topic or discussion, we're going to be talking about trust and gender reconciliation. The subject obviously is, how can we demystify this one big process or step that every legal professional in Canada has to do as part and parcel of the documents that they need to deliver to be compliant and to be certified to be in this profession. There's obviously certain boundaries and certain rules and policies that each jurisdictional legal body or society would have encompassed within their rules. So we're going to talk about how you could maximize the use of a legal accounting software such as uLawPractice, and what does it really take to do trust and gender reconciliation, and some of the benefits of using a software such as ours. Today's webinar is not accredited for CPD yet. We have applied for it, and we hope we should receive it either by end of this month or year, or hopefully we could use this as a CPD in January. Okay. Once again, I kindly request you to mute your phone lines and use the chat window to ask any questions that you may have. Our support staff are available to answer any questions either during my session or later on. Like every other uLaw webinar, today's webinar has an agenda as well. And as based on the subject matter we're going to be discussing today, we're fundamentally going to talk about the reconciliation process, and we're going to break it down by the trust reconciliation and the general. Okay. Now, the mandatory legal compliance rules are around that if you do take trust money, then you most definitely must have a trust reconciliation. Now, the general reconciliation, as much as it's a great document, not necessarily a mandatory document, but it's certainly a way for you to stay in shape with regards to your business and ensuring that your balances and your books balance between what you see in the bank and your bookkeeping software, okay, from the general expenses and everything else that you have. Now, the next important aspect that we're going to touch upon is what does it take for you as a legal professional, whether you've just started your business or you've been in business for a while now, to be audit ready, especially if you've not been audited yet. Okay. How to be prepared for an audit? We're going to walk through a quick checklist, and we're going to talk about how the reconciliation process and the audit checklist go hand in hand. In fact, in many ways, the reconciliation process would probably be a precursor or a prerequisite in many ways to ensure that all of your audit checklist documents are prudent and the numbers reflect the exact numbers that they should reflect. The fact that you have done the reconciliation. Okay. And finally, we're going to talk about the core aspects of an audit-ready financial management process. What are the key steps that you could take to always be ready for an audit? Okay, so be confident and compliant throughout. We're going to wrap up the final aspects of today's presentation with a quick demo or a demonstration using uLaw as an example of how you can reconcile trust general as well as run through the audit checklist that we have as a separate feature within our product. Okay. This was a slide that we added further to our last presentation, as this was very important to really set the expectation or the context of what we're talking about. So before I jump into talking about the reconciliation process, let me quickly jump into reiterating the accounting systems that the Law Society in its bookkeeping guidelines has talked about and why it's important for us to talk about it today. If you really look, I'm going to run through this real quick. So if you look at the suggested types of systems, if you will, we're not going to touch upon the advantages and disadvantages, but if you really look at the systems, you look at the manual double entry, the OneWrite system, a spreadsheet software, a general accounting software, and a purpose-built legal accounting software. The bottom line of any of these systems is that you capture the transactions of each and every aspect of your legal business, especially if it's involving trust, as and when it happens. Have a system that allows you to stay on top of all those transactions and keep it as close as possible to real life, meaning to your bank. Okay? Now, these different systems obviously would play a part on the amount of manual effort and the amount of the process integrity that is required on your part to stay compliant and always be, have a process, I guess, to be ready, to be audit ready at any time. With the manual double entry, it is a time-consuming process. So if you're a type of person who only has one file, two files, and you have the time and you want to do this on your own, then you can explore it. But with the advent of technology in today's context, the goal is how can I maximize my time so that I could then spend it on other better things? And can the software industry that's really revolutionizing the legal space today help you as a legal professional? And with cloud being a big component and a player of it, how can that help you be more cost effective? Okay, so with a legal accounting software, especially on the cloud, similar to uLaw, you get both the advantages of a purpose-built legal accounting software, as well as the fact that it's on the cloud means that it's less expensive. But the training is still a learning curve that's a big part of any adoption of a software. Okay, so we're going to talk about how important it is as part of your reconciliation or a precursor to even your reconciliation, how important it is to track and record transactions as they happen, and how you can make it as a process or a process on a monthly basis at a minimum of reconciling your books in your bookkeeping software, which could be any of these systems or a legal accounting software, with actual bank records. Okay. Okay. With that being said, let's really look at the different components of a trust reconciliation report. So this is one of the documents that you would have to sign off on as part of the monthly documentation. Apart from the reconciliation, there's a bunch of other documents like your ledgers and journals that you have to generate on a monthly basis. But we start with the reconciliation process, and we're going to quickly dive deep into the four major components as we see it within that reconciliation report. Okay, so what's the step one? The step one really, or before that, let me just quickly articulate what the reconciliation of trust and what that document really entails. So technically, the reconciliation process is an accounting procedure that demonstrates or illustrates how your bookkeeping records and your bookkeeping software are correct. And when the word correct can be a bit misleading, it truly is that you've kept that on track with what's actually happened in the bank. Okay, so that's really keeping it as close as possible. It doesn't have to be the same. There's always a misconception whether my numbers in the bank and the numbers, at the month closure when I do my reconciliation, whether they have to be the same. They may not be the same. I mean, they may be the same. They may not be the same, purely based on the situation. So if you're reconciling on the 28th of a certain month, and if you so happen to have received a trust retainer as a check, and let's assume it's a Friday. Now, you've obviously taken that retainer. You may have updated your bookkeeping software, that you have received that retainer. So your trust money, pool trust account is going to be debited, or you're going to deposit that $1,000 into your bookkeeping software. And the bookkeeping software is going to reflect that. Now, let's say you went to the bank on the Friday afternoon and you deposited that in your bank. And let's assume that it took the 29th and 30th, which is the Saturday and Sunday, and it only reflected, or would potentially only reflect on the 1st of the next month. then when you actually do the reconciliation on the 28th, your bookkeeping software's trust money is going to show $1,000 more than your bank. Okay? It's not the same, but all you have to do as a legal professional is illustrate why it's not the same. That's it. So basically, it's an outstanding deposit. So if you really look at the different conditions that outline why they're different, it can either be that they're outstanding checks or they're outstanding deposits. And the third important aspect to it also could be a bank error. And this is something that we see very common, especially for some of our new legal practitioner friends who just joined. They may have some issues early on where they have to educate their bank sometimes to either A, not add an interest charge to the bank, or deposit any interests that have been earned into that trust account, because that needs to be left alone and untouched. So either the bank error could be positive, which means that the bank has deposited some money into that trust account, or it could be negative, which means that the bank has taken a certain amount from that trust account. Now, those are numbers that technically the bookkeeping software may not know, depending on how much you've caught up. Okay? So if that's the case, just like the example that I gave you earlier on, where there was an outstanding deposit, at the time of reconciliation, you also have the obligation to illustrate the bank errors that may have occurred during that time period, just to make sure that you're illustrating why and how these records are different, if they are. Okay? So that's really step one, is as part of your pooled trust account, mixed trust account, what is your balance per bank statement? That's number one thing, which you obviously know when you open up your electronic bank account or any other means of way of opening up your bank balance. You've got outstanding checks, and then it's a great habit and a practice and a part of your reconciliation report to itemize these outstanding checks. So if you really look at it, they talk about the outstanding checks, the check number, the date, and the amount, and what they all add up to. Likewise, you could have it also for the outstanding deposits. Okay, that's really step two. And if you look at step three, this is really important too. You obviously have to list down your client's trust listing. So based on the individual file, whether it's by name and or file number, and the last activity date, you want to basically tell us or tell the Law Society what the balance in that particular client's trust listing is, and summarize and add up all those. Okay? And then the fourth step is basically the comparison between the bank balance, as I mentioned, and the client's trust ledger, or you could talk about the bank versus the bookkeeping software. Okay? Keep it in simpler terms. And as I said, there can only be three or four. One is the recording of the bank statements and the balances, recording of the outstanding checks and deposits and any errors, if any, recording the client's trust listing, which you probably should anyways, and then comparing these two and telling the Law Society very clearly that if there are differences, then the reasoning behind it. Okay? Now, if you look at the reconciliation of general, we think it's one step less. Okay? So you basically will provide the closing balance of your bank statement, very similar to that of the trust. Okay? You've got step two, which are a listing of all the outstanding withdrawals and payments. Okay, so that's both the same thing. It's outstanding checks and outstanding deposits. And a comparison between what the bank ledger is and your bookkeeping ledger. Okay? All right. So now that we've kind of had a quick snapshot of what these reports really look like and what you need to keep in mind as you generate these reports, and then your most welcome to generate these reports manually as long as you have a tab on recording all these different components that go into that reconciliation report. Okay? So now let's take a look at how do we prepare these reconciliation reports and the pieces of information that you require from a perspective of uLaw being used as a legal accounting software. Now you should expect the same out of any legal accounting software at the least. Obviously we've made a few of these things easier for our friends who use our product. But this is just again an example of how you would accomplish it if you were using software to help you through this process. Okay. Now, the first step in how we have accomplished in you generating the reconciliation process is providing the date. So this is really the month end, right? Either the 28th or the 30th, whatever is the month end date that you choose. Recording the bank balance as per open up your bank account, open up your legal accounting software or your system that you have, and keep them side by side. Look at your bank balance, record what that bank balance is so that we know what that starting point number can be. And in the accounting software, as you work through your matters, as you deposit and withdraw money from trust, the software obviously keeps a track of all of those transactions by date. And all you're looking to do is A, ensure that the date recorded in your bookkeeping software is similar to that of the bank. If not, make the change. And ensure that you've cleared that transaction, agreeing that those transactions match between your bookkeeping software and your bank. And as you do that, we're going to get into a live demo where you would see it. You would see that the records match, or if there's any outstanding, we'll record that as well. And once total reconciled account balance and the balances per ledger are the same, because they have to be the same, these numbers tell you why, the different numbers and the pluses and minuses that go to make them same. That's when you can record and generate that reconciliation process. Now there's two benefits. There are core benefits to why you should reconcile your records on a periodic basis. And again, the monthly basis is a minimum. If you have the opportunity to, you probably should reconcile every day, if not every week at the least, right? I think the once a month was a time when you had to do this manually, or the options for you to automate this were limited. Now in today's age and technology, the fact that you have all the bells and whistles and the help you can get out of these software systems, truly you should make that as a part of your weekly process, if not a daily process. Because the sooner you can catch up, the more confident you're going to be, even at the end of the month. Even if it's a summary of 4 weekly reconciliation, so that you exactly know, because your memory is so fresh. If you do it on a daily basis, that's fantastic, because your memory is so fresh. That end of the day, you know that this is the amount that came in, this is the amount that went out. You're going to make sure that it's reconciled with your bank. Or if you can make it a part of a habit as a weekly basis, because sometimes the banks can take some time even to adjust bank errors. We've seen that. Then that's a good process to have. But at a minimum, from a law society's compliance perspective, you have to do it once a month. So obviously, compliance is a key factor as to why you would do the reconciliation. But there's also a very, very subliminal, advantage to why you should do your reconciliation. Because when you do your reconciliation, okay, it not only catches all those transactions that are available in your accounting system but do not match with your bank. Okay, that's a given. So maybe you deposited the money in the bank and you did not tell your legal accounting software or your software about it. Or you put it into your accounting software, but you still have not deposited it into your bank. Okay, there's only one of two things that can happen. Either it's an outstanding deposit, just like we looked at the previous document. So this is pretty much what it is. It's either an outstanding deposit or it's an outstanding check. Okay? Where either the accounting system knows more, the bank doesn't, or the other way around. And the second advantage that we feel is as you reconcile, you're also ensuring that all the numbers, the banking numbers, especially with general reconciliation, the numbers that govern your expense revenue are now prudent, are valid, and they're ready for you to run all of those reports. Okay, so keeping them up to date. That's one of the most important components of it. In fact, you're ready to a point where you're actually ready to file taxes with CRA because you're also going to continue using, as I said, the revenue component of it, which if taxes have been paid, etc. Okay? So 2 fundamental reasons why you would do your reconciliation. One, with to, catch any issues that you may have. The second is when you do that reconciliation month by month or in a timely period, you're going to audit-proof yourself as well as get you ready up to date to also generate revenue-related reports that are very important for you as a business owner, right? So you as a business owner, you want to be sure that that's the profit. You can be confident about it, that that's the number that that you made that month. So our question is, as you go down this path, as a legal professional, you have your routine depending on the different areas of practice you focus on. There's many things you're doing. You're hustling between the morning 8 to evening 6. But as you do this, as reconciliation and these audit reports are a very important component of your life, as important as it is, we recently now obviously have heard about horror stories where, certain legal professionals, even in Ontario, have not dealt with trust money well, and in fact, they've been dismissed of their license. So it's very sensitive, it's very critical, but our viewpoint is, can we make this easy, not only easy, but easily understandable and easy to use, without taking away the importance of this process? Can we slowly take away a little bit of that fear factor of that process? Even if you're, quote-unquote, procrastinating some of the work that you have to do, are we still able to, get your back, if you will, and help you catch up in a more forgiving way? I think that's our goal, and that's what we're heading towards. But obviously, there's a certain discipline, there's a certain process, at a minimum, that you as a legal professional need to bring to the table to be able to generate these required documents on a monthly basis at a minimum. Okay, so first, acknowledge all of the documents that are required. So once you paint that picture of what those documents are, you're going to be like, all right, is that it? So it's just these 10, 12 documents that I need to generate on a monthly basis? Perfect. Then you can work towards how you can align your life to make that happen. And now, as you participate in these CPD sessions and talk to friends and discover more about other products and tools that are out there, you're then going to be able to position yourself to saying, how fast and how efficient can I generate those 10 and 12 documents on a monthly basis? So that's really the crux of this whole CPD or this whole webinar and everything we're saying. Okay, so the question is, are you audit ready if your reconciliation is complete? And our answer is yes. And what we also say beyond that is not only yes, we give you a quick Law Society compliance checkbox. After you've completed your monthly reconciliation, you can just, and this is specific to uLaw, you can actually just download all of those ledgers and journals and documents that you need as part of your monthly documentation. Okay? So if you look at the ledgers, it's the client's trust ledger, which is, again, a part of your reconciliation process, the client's general ledger, and then you have the 4 journals that we've discussed in other webinars, the trust receipt, the general receipt, trust payments, and the general disbursements, right? And again, those are the 6 documents in addition to the fee book, expense book, and obviously you're going to do the trust in general first. So with these 2 done, the expense book, fee book, and these 6 documents, the numbers are going to be solid rock and they're up to date. The inter-matter trust transfer is a report, again, really depending on the area of practice. If you do real estate and if you do inter-matter trust transfer, then that's an additional document. There's Form 9As that you also have to make that part of that compliance checklist. Okay? Okay. So when we looked at putting this presentation together, we looked at, all right, what are the true reconciliations in general, all the ledgers and journals and law society documents in addition to the trust and general reconciliations. So you have them here. You have them grouped as ledgers, journals, and other. But then we looked at how do you organize yourself and what is that checklist and how can you best produce them. Okay, so this particular presentation, as always, is going to be available to you at the end of the weekend or earlier in the week for you to access. So if you want to go through them, by all means. But if we have to divvy it up into the 3 or 4 processes, we talk about the fee structure and handling a retainer. So that's a very important starting point checklist. Capture, it all starts with the basic, right? It all starts with how do you align your practice so that you properly of capturing the fee structure. Then we talk about how do you capture the information. What was you going to capture? Let me reiterate that. So let's say you're capturing a retainer of $1,000. That's the retainer you're going to ask your client. Make sure there's a process for you to communicate that to your client through a retainer letter. Because if you've not done that, if you've not agreed upon that, then obviously those numbers may differ. You may have situations where you have to compete with your client about what that number is. And if those numbers are not right, then you may have to reconcile at later stages of the month. Okay? So starting with the fee structure, how you manage to handle it, have a design, have a process, have a discipline. If it's not going to be a billable time, if it's not going to be a flat rate, if it's contingency based, decide how that's going to be, what that percentage of contingency is going to be. Is that going to include your disbursements? Okay, that's a big question to be asked. Or if disbursements are going to be charged in addition to your fees. Make sure you have a process to generate and provide receipts for every payment that you receive, whether it's trust or general. Have a discipline or some kind of a process of how you want to handle disbursements. Do you want to do it through trust? Or do you want those airplane miles and hence you're going to do it through your own payment first and then do it through your general reconciliation? Okay? These are all cost recovery measures, and obviously you got to keep in mind the taxes involved as well. Capture dockets as and when they happen. This is one big challenge we find. Many times, as silly as it may seem, many times the reconciliation process is, there's a big burden on these reconciliation processes only because the dockets were not captured on time, which does not reflect the right numbers. So it does have a cascading effect. So that's the point. The bottom line is if you have all of this structured, if you have your house in order, the reconciliation process and the generation of these documents should just be a breeze. Raise invoices, as periodic as it should be. Do not wait for it, because only when you raise that invoice are your ledgers going to be reflected. Okay? Only if you raise an invoice can you move that trust money. And only if you move that trust money within a certain time period do we know whether that's money moved from trust to general and if it's actually accomplished both in the bank as well as your bookkeeping software. Okay, so don't wait for the last minute. Do these, in a very scientific manner on a day-to-day basis. Have a process to do that. Capture information as and when they happen. Once you've found a way to structure your fee and handle the retainer, have a structure for getting paid. Okay, so if you raised an invoice, do a regular check of your invoice balances. Now there's two things that can happen with an invoice balances. One is where your client owes you money. Okay, maybe there's no trust involved and they owe you money, or they owe you money over and above the trust money that they've already given you. Okay, that's pretty straightforward based on your terms, whether it's net 30, 15, 60. Make sure you follow up to get that payment. Another component to the invoice balance is you failing at times based on either discipline or any otherwise the reason, you not transferring the trust eligible amount from your trust account into your general account. And this is something we see very often with our legal friends that we work with. If you've got trust money, raise the invoice and move that money from trust to general. Make it a process. Okay? And if you've organized yourself to take disbursements out of trust, make sure that you're not over withdrawing. So a big part of uLaw as a legal accounting software is that it keeps you compliant. It keeps you to only, it never can you over withdraw from a uLaw trust account. And that's very critical. It's only the eligible amount that you can draw. So once you've figured out how you're going to ask for the money, make sure you docket the time so that you can reflect your effort. And then let's move on to how you can get paid. Have the discipline to get paid by asking for the money that the client owes you, as well as ensuring that on a timely basis that you're moving all the money from trust to general. So everything on your side is perfect and fine. And then comes the third component, which is handling the trust accounts and all the procedures and documents. So the trust ledgers, receipts and disbursements, reconciliations, the Form 9As for electronic fund transfers, and within your general account, managing your general ledgers, as well as the receipts and disbursements. Again, this is all part of that checklist that we spoke about. Maintaining your fee book, your expense book, and any record of discounts or write-offs that you've captured. Okay, and it happens all the time. That's it. As much as I'm going to repeat myself, it's very important. Have a process to get the fee structure in place. Capture dockets on time. Raise invoices on a timely manner. That's the first checklist you want to make sure. And then let's move to getting paid on time, which is asking your client. So picking up the phone, having a list of everyone that owes you money and making that phone call, or making your assistant do that phone call to get paid on time. If you're not going to be paid on time, at least find out when. If you're not going to be paid off, then it's faster the better to capture those bad accounts and then reflect them either as discounts or write-offs. Right? Either you can negotiate with the client saying, all right, it's tough luck, you can't pay me, but let's just figure out a common ground that we can agree upon. So do that faster rather than wait till the end. And then ensure you move your trust money from trust to general. And if you do these two things, you can be rest assured if you're using the right legal accounting software such as uLaw, the documentation and the ledgering happens behind the scene where you're just generating these appropriate documents. As I said, regardless of what system and process you have today or plan on getting for tomorrow, if it's a manual process, it really comes down to, regardless of whether it's a manual process or automated process, I think you kind of have an understanding of the documents that need to be generated, period, right? Now then the question comes, as I mentioned earlier on, how do I take advantage of the day and age that I'm in right now? I'm not in the 1950s, I'm not in the 1960s, I'm in 2017, and how do I be more efficient so that I could stay competitive, so that I can work on more files, or maybe I can spend more time with my family? So how do I take advantage of all those advantages that I have because of the era that I'm living in? That includes the softwares and tools and the processes that have been designed to generate these documents. So if you're doing it manually, it's probably going to take you a lot of time. If you're going to be using an automated system, it's going to take lesser time. So it's as simple as that. Because every entry, as we mentioned here, the double entry, it comes down to whether you want to manage it yourself manually, or based on due diligence, can you find out a system that can automate and do this for you? Okay? Because manual, the fact that you're already managing with so many other things as part of who you are as a legal professional, you want to save as much as time from doing manual accounting. Because manual accounting is as seemingly as possible. I mean, it might seem cheap. It might seem that you're doing it and you're not paying for software, but time is money. I'm sure you know this better than anyone else. Not only is time and money in terms of the amount of time that you have to spend, it's also time is money because if you do make a manual error, so if you do make an error in a calculation, in not putting the double entry, the amount of time that you have to spend in correcting those errors is also time. And that's all going to add. And without overselling the need for a software, I'm just going to say, because you're in 2017 and going forward, please do consider a software. And if you're doing that, might as well consider a legal accounting software. That makes life easier and simpler. The bottom line of why these softwares, because if you can build, all you have to do is build a discipline and a process to capture transactions as and when they happen and put it into that software, okay, and do the right things that you should do. Automatically generate invoices, move the money, then the documentation and the fear factor of all those documents that are required as part of that audit, whenever that may happen, you then make yourself audit-proof by always being ready for it, whether it's going to be within the first 18 months of your practice being opened or, a spot audit that you've just been called upon. You're always going to be, confident and ready to take that audit. Okay? And I'm not going to reiterate. I think I've tried to stress upon one of the components is for you to be able to generate these documents, do consider a legal accounting software as that can make your lives much more simpler. So we've got 40 minutes into our presentation today. I want to leave you with a few references that you can look at. You want to probably educate yourself with the expectations that the Law Society has and the different components and documents that the Law Society requests you to present. Okay, that's a good laundry list to be aware of. So if you can look at the spot audit, all of these are on the website of lsuc.on.ca. And again, this presentation is going to be available nevertheless for you to look at. Okay, so look at the spot audit, look at the audit checklist, and we've basically taken our software and built it based on some of these references as well. Just a FAQ, very important, and I think it's a great resource for legal professionals, especially in Ontario, also Canada-wide, but specifically for Ontario. If you look at that FAQ, it's it's got all of these different questions that different individuals may have asked the Law Society that they've kind of filtered and have for you to review. So all those questions that you probably don't want to ask us today, but it's in your mind, you may actually come across those questions already being answered by the Law Society. Okay? And a very important read, again, reading for pleasure, if not anything else, is the bookkeeping guidelines. Okay? The bookkeeping guidelines really talk about the different components of legal accounting that a legal professional needs to be aware of. And as I said, half the battle is knowing the documents that you have to generate and why you're doing that. And the second half of the battle is figuring out a way of the systems and tools that can help you generate those documents in a timely, efficient manner. So that's pretty much it. Okay, for those who don't know who we are, as I mentioned, we're a very proud Canadian legal accounting and practice management software company based out of Ottawa. And we only serve Canadian legal professionals, and we're proud to do so. And please do check us out on our website, and we do offer no obligation 30-day trial. Okay? So I want to take the next 10 minutes that I have, 10 to 15 minutes that I have, to quickly jump into uLaw and kind of show you what this reconciliation process for both trust and general mean, how easy it is to generate those reports, and what that report looks like. And once you've done that reconciliation, let's go and generate those Law Society audit documents on a monthly basis, and then be aware of how simplistic it can get once you've got all the information in. Before I forget, please do provide your feedback. We've attached our link that you could use on our chat window to provide your feedback as well as your attendance in today's webinar. And once again, request that you participate by asking questions or sharing your feedback or comments, not only about this webinar, but about the subject matter expertise as well. I think it's just my responsibility to share that any of the existing uLaw users that are joining us today, we have introduced one of the highest data security measures that a software company on the cloud can take. These are measures taken by billion-dollar conglomerates, big companies and enterprises. We as a small company, we still want to provide that same level of maturity in our data security. So we've introduced the two-factor authentication. It's really to stop robotic access and secure your data. So all you have to do is, once you see this box, be rest assured we will automatically send you an email with a code, a 4-digit code that you wait for, enter it. If by some means you've not received that email, just click on the uLaw support and click the blue button email. We would get the particular code ourselves, and then we'll call you and give you that code. So the reason we've done that is to, again, stop all of the robot access. We did the CAPTCHA, we did the, obviously our HTTPS, and we did the CAPTCHA, and we've improved our passwords, and the fourth step is bringing this two-factor authentication. Okay, so keep in mind, change is inevitable, change is good, and this change is to further secure your data. Perfect. So I think there's a quick question about how you would enter a retainer payment made up of check and cash together. So we could certainly look at that. I mean, I would put them as two separate retainer transactions, one made through a cash, one made through the check for the same file, because it's money going into retainer nevertheless. So we could capture that real fast. So I'll do that at the end of the session. That's a good question. So I'm logged into a Fixtures. Let me see if I can sign out and quickly log in as uLawPractice, which is the playground account that I continuously use for all my demonstrations. I'm just logging into one of my playground accounts as the lawyer Roger Moore. And the reason why it's not asking me for my two-factor authorization is that I've already logged in. Again, keep in mind that it's only a one-time, and every time you open uLaw through using a new device, you're going to be prompted with that question. It's going to send an, oh, there you go. I think we automated that just to show it to you. So, all right, perfect. So this is what you would see. I'm just trying to mimic this. This is what you would see. This goes to my specific email. This is the email that you have on file. And you should wait for that email for us to send it to you, something similar to this. But if for whatever reason, I want to show you this as well. If for whatever reason you've not received that email, or if it's not within a timely manner and you want to get it done right away, click on uLaw support and just say, email me the code. We would receive, I'm just showing you live. Takes a couple of minutes. There you go. There you go. So you basically, this is the previous email that I must have got already. This is the one that we get, which talks about the licensee, the phone number, and the email, 6894. So one of our staff would do is actually give you a call or send you an email with the code as soon as possible in a very prompt manner. This is a one-time process. Put that code in and hit submit. And that's it. It's one of those processes. It's like a, I don't know, it's like cough syrup. It's hard. It's sometimes irritating, but you probably have to take it for the bigger benefits that there are. Okay, this is a true measure of data security, so that no one can accidentally just start using your account or even access it, right? So, perfect. So, I'm just going to open up one of my accounting windows. So, as you know, a good majority for legal professionals spend their time in their matter. They look at docketing, generating, retainers. We're not going to focus on all that. I'm just going to specifically focus on the reconciliation and the audit checklist. Okay, so I go into my accounts, and I do my document generation. To actually summarize all of this on a monthly basis, we've got this one panel called compliance. And if you look at it, one of my first steps, is the trust reconciliation. You can either come here and do that, or you can straight away go into reconciliation and look at trust. Let me do the compliance way. I'm going to do my trust reconciliation. It's a bit of a help file that kind of really walks you through what information you actually have to enter in this reconciliation screen. Obviously the date, bank balance, clear the deposit as well as the withdrawals based on the date that uLaw knows, and marry it with the actual date in the bank, and reconcile. Okay? If these two numbers match as we say, the blue button would appear. So click on it and it takes you into the real reconciliation screen. So let's take an example. So right now, these are the total unexpected balances. So this is the bookkeeping software's balance. Keep in mind this is a playground account. So this is the $239,000 that's there in my account. So let me go ahead and so let's assume that this is what my bank balance is. Okay. Now, I've entered the date. Just for the purposes of today's demo, I'll put in today's date. I could actually put, 28th when I get to that. Or I could have done this for the previous month of October as well. Okay? You put in the date, you put in the balance as per the bank, exactly what so you basically have to have this, and then open up your TD, RBC, or any other bank's online account. Keep them side by side, look at the bank balance, enter that. Tell us if you have any bank errors. Okay? And then look at the different trust transactions that we have recorded in uLaw. So from, there's just one transaction from 2014, but from since then to now, these are all the uncleared trust transactions that we know within uLaw exist. And they have a date. So each transaction obviously has a date, right? The important component, one of the first important component is to marry these two dates, especially if it's all within the 28th or whatever the monthly cycle is. Okay, so this in uLaw was the 15th of October 2014. Click on the bank and tell us if it was the 15th. If not, if it was the 16th, you can choose that. So that's one transaction that you've given us the clarity on and you've checked off. Okay, that's one clear transaction. Let's look at the next transaction. And this was the retainer that you received that you actually entered through the matter that we've captured. And here's the deposit. There's another retainer for the same client. If you really look at it to answer one of the questions that just came up, that would be a retainer through a check and there would be a retainer through cash. That's how that would reflect in uLaw when you actually enter that. So let's look at that. Let's say this is the same date. Done. Then let's look at this withdrawal. So that was a settlement payout for the same person, Andy Murray, for this particular matter, AM 20959, and you wrote a check number 34. Now you tell us that it's left, or it's, in uLaw it's recorded as the 17th of November, but let's say it only cleared on the 18th. You want to click the bank and tell us what that bank date is. They don't have to be the same, they can be different. Then if you look at another deposit for the same client, Andy Murray, for the same matter, in fact, let's say this is the 13th as well. There's a refund of the retainer of the same $200. Let's say it refunded back on the 22nd. And here's a more recent retainer that we received. Let's say this was 9th as well. So now that I've cleared, when I say clear, essentially I have cleared my conscience as well as the transactions between my bookkeeping software, uLaw, and my bank. And we made it simple that the only thing you're doing is changing the date. Okay? Now, if there is a transaction in the bank, so let's say there's an additional retainer of a deposit rather in the bank for $500. Let's say this was for, Robert Downey Jr. Okay, and that's shown as a deposit in your bank, and you don't see it in this list right here. And it just means one thing, that you have not entered that transaction for uLaw to know. So all you have to do is quickly jump out of the screen, okay? Go into that particular matter, go into the retainer, change the date, deposit that retainer, and come back here, and it's going to reflect that. Okay? Now that I've cleared this, you see those have reduced the number of cleared transactions. You see now my numbers for both what my bank balance is and the book balance or the bookkeeping software's balance are the same. Now I go ahead and generate my reconciliation report. And I click the button, and that's pretty much it. And this is going to generate a report very similar to the one that we saw in our presentation, which is this one right here. And this particular template of a report is taken from the bookkeeping guidelines, of the Law Society. So let me open up the PDF document. And if you look at these two documents side by side, if you look at the first step 1, which is the pooled trust account, it talks about the balance. Step 2 is talking about outstanding checks, deposits. Step 3 is the client's trust listing. The 4th are comparisons, right? So if you really look at our document, done the same thing. The mixed trust account, the balance for bank statement as you provided it, any outstanding withdrawals payments, any outstanding deposits as of this date, because this is the date when I generated this document, and any reported bank errors. Now, we go one step further from beyond what the Law Society provides as a template to also tell you all of those transactions that were cleared, okay? Because you're fundamentally capturing the ones that haven't cleared in these three components. And this is talking about the actual records that actually cleared. Then jumping on to the next part of the report, which is your client's trust listing. So again, keep in mind this is a playground account, so these numbers are from 2015. But that should give you the confidence that we can capture beyond certain data as well. So here's a client's trust listing of every possible fake client you have, right from the Supermans and the Spidermans of the world. And that's the total funds. And for the final step 4 of the comparison, got the total reconciled trust bank balance, and it's the same with the balances as per your trust ledger. Okay? So this is your trust reconciliation report, and all you had to do is go through that trust reconciliation. So now this is done, it's checked off. So you would go file this either with the uLaw, or you can file this and store it digitally in your local computer or on the cloud. You do the same thing for your general. Okay? Same thing. This obviously takes in all of the expenses that you've had. You've got the Panera Breads, the different restaurants that you've had dinner, etc. Right? You can clear them. Again, same thing. This particular withdrawal, maybe this happened on the 16th. So just like your general reconciliation, you're clearing all of these transactions. Okay? And you basically, and again, I can reconcile even my credit card, any of my general bank statements. It could be my general checking account. In this case, I'm doing my credit card. You can reconcile your credit card as a general bank, right? And here is your general reconciliation for your TD Gold credit card. All of those transactions cleared. Obviously, there were no bank errors. You can always reflect those bank errors as well. So the general reconciliation is done. Now that you've done these two major reconciliations, let's go look at our client's trust document, all the ledgers. Download it, do it for the month of November. Okay, download. Done, right? So here's your monthly ledger for trust. So this is the only one that was done for November. And there you go. For general, because I think most of the others were previous dates. Let's do the general for this particular month. It's done. So that's how you could just start to generate all of those Law Society documents once you reconciled one at a time. So here's your entire general reconciliation, or sorry, general ledger, client's general ledger, by client, by file. And if you had multiple files for the same client, we capture that as well. Okay? Well, the last question that was asked about how do you reflect. So I'm going to close out of this. You obviously can generate the trust, general receipt, payments, etc. the same way. But very important that you start with your trust reconciliation, your general reconciliation, and then start to do that. So a quick question is, how do you capture a retainer, both as a cash and as a check? I think you're basically asking for partial. I would rather put them as two transactions, if that makes sense. I'll do my retainer. Say new retainer. So let's say the overall retainer was $500, and they gave you a check for $300. And you do another retainer for $200 as cash. You'd say new retainer, same date, because it's kind of happened right away. And now this time you say cash. Now obviously keep in mind that once you receive that cash money, you got to put it from trust to general, right? So make it a point that you do transfer that money from trust to general, or rather from the cash account, sorry, to the general account. Oh, yeah. Basically, you put it into the intermediary cash account. Thank you for that. And obviously, we give you a warning that says, hey, once you put it into cash account, make sure you deposit into your trust account. If you've already done it, you can just say deposit now. And we help you by moving it automatically from your cash account into your trust account. Cash into trust, $200. And we put a little description as well. Hope that answered that question. Any other questions, please? Okay, so we've actually exceeded our time. Again, please do take the time to send us an email if you have any specific questions. But if not, do mark your attendance and give us your feedback about the subject as well as today's webinar. And thank you once again for participating, and have yourself a great weekend.